Yeah, let's first take a look at how the Asian markets have started off today, and it's a dominantly red screen considering the sell-off that you saw in the tech shares on Wall Street overnight. The Taiwanese index is trading lower by 0.6%. The Hang Seng is down 1%. Similar sort of trend available for the Kospi as well. The chip stocks are selling off there as well, so almost a 0.25 to 2% cut on the Kospi. The Nikkei though absolutely flat, and the Shanghai Composite trading 0.5% lower. So the Asian markets have opened largely lower, carrying off from where Wall Street left off overnight, particularly the Nasdaq. Pull up the GIF Nifty, give you an idea of how our own markets are likely to start off. Well, after a topsy-turvy day yesterday, the implied open is still suggesting an absolutely sluggish/flat start as we speak, considering today being the Sensex weekly expiry. To set you up for today's trade, we are here to tell you the trade setup, the stocks you need to keep an eye out for, and of course the setup on the F&O side of things as well. You know, first up, you take a look at what happened to IT yesterday. You would believe that the Nifty would not have managed any sort of gain yesterday, but the Nifty IT, despite being down 6%, the Nifty managed to close in the green. Then that too by close to around 50 points, and that is because the index heavyweights managed to put their hand up in yesterday's trading session. Reliance Industries, ICICI Bank, HDFC Bank, all of them managed to offset the losses that were seen in the IT stocks. So what about today? Well, we need to see whether that sustains, today being the Sensex weekly expiry. You see any further recovery in the IT stocks, whether these index heavyweights continue to pull the index higher if in case there is any further pressure on IT. And of course, there is another earnings heavy day in store, not miss sight of that. Now, of course, the Nifty move today hinges on how IT goes today, whether it be on the upside or on the downside. Well, because ex-IT yesterday, the Nifty could have easily tested 26,000, make no mistake. 26,000, that remains the first key level on the upside. Of course, 25,800 is the immediate one. The psychological one remains 26,000. Now, the Nifty Bank was relatively steady compared to the last 30 minutes in which the index fell in yesterday's trade. But otherwise, compared to the Nifty Bank was fairly steady. Today, as I mentioned, it's an earnings heavy day. Bharti Airtel, Hero MotoCorp, IOC, Keynes Tech, PFC, LIC, a lot of results today. And of course, watch out for NSDL because the shareholder lock-in is ending today. But for now, the GIF Nifty is indicating a subdued start, the 25,800 being the first level on the upside to watch out for, and then followed by the 26,000 mark. Over to Ria now, who would list out the stocks that you need to keep an eye out for in today's session. Ria, morning, what's on your list?
Well, good morning, Homers. Let's start off with Trent first. The net profit has come in at 510 crores versus estimates of 537 crores. EBITDA, however, has been above estimates at 1,081 crores. For Tata Power, they have reported a muted quarter this time around. Net profit has come in at roughly 1,194 crores. Revenue, however, has come in at roughly 14,000 crores versus estimates of 16,000 crores. For Metropolis Health, the net profit has seen an increase of roughly 32% compared to the previous year. Revenue has also seen an increase of around 26%, and further, the company has also approved a bonus issue in the ratio of 3:1. For Medanta, they have seen roughly 19% revenue growth on a year-on-year basis, which has been led by developing hospitals as well as international patients. Margins, however, have come down to 19% versus 25% in quarter 3 of last year, and this has been impacted by the opening of the new Noida hospital. For Apollo Tyres, the net profit has gone up by roughly 40% on a year-on-year basis, and the revenue has also seen an increase of roughly 12% compared to the previous year. And further, the company has said that they are also going to invest roughly 5,810 crores in Andhra Pradesh in their plant for capacity expansion. For Cummins, for quarter 3, they have missed estimates both on the revenue as well as the EBITDA front. Revenue has come in at roughly 3,055 crores and EBITDA at 635 crores versus estimates of 670 crores. For JSW Cement, the net profit has come in this time around at 131 crores versus a loss of 80 crores in quarter 3 of last year. The revenue has also seen an increase of roughly 13% on a year-on-year basis. And lastly, keep an eye on Marico as well. The company is going to acquire 60% of Cosmix Wellness for a paid-up share capital for 226 crores.
Keep all of these stocks on your radar. Ria, thank you for that update. Over to Mangalam now, joins in with cues from the F&O space. Mangalam, good morning. It's the Sensex weekly expiry today, but what is the F&O data indicating now after yesterday's session?
The F&O data is indicating resilience, and that's exactly what played out in yesterday's trading session as well. If you look at the Nifty and the Nifty IT, you wouldn't believe that the Nifty ended 40 points higher when the IT index was down by almost 6%. The reason for that is Reliance did well, Nifty Bank did well, and at the same time, towards the end, we saw some recovery from the lows on the IT index as well. The range on the Nifty yesterday, the low and the high, told you that, we are now, after that 600-point reset on the way up post the US-India trade deal, we've moved higher from 24,900 to around 25,500 at the lower end and around 25,800 to 26,000 at the upper end. And that ties in with the 20 and the 50-day moving average on the Nifty as well. The FIs, they continue to buy in cash market. Yes, it wasn't a 5,000 crore purchase that we saw in the previous trading session, but then again, it wasn't a 3,000 crore sell that we saw in the sessions prior to that as well. So any non-negative is a positive. The FIs continue to cover their short positions in index futures as well. Yesterday, they bought about 1,800 crore rupees with 6,000 long contracts being covered, and as a result of which, short contracts being covered, as a result of which the FII shorts now are at 81%, longs have increased to 19% in just 3 trading sessions. That's a positive. And in addition to that, they've also written nearly twice as many puts as calls. So that's telling you that there is a lot firmer support than there is resistance on the way up. So if you look at the active options, you would see the 25,700 put fairly active in trade and the 25,800 put fairly active. Both of them have a premium of anywhere between 100 to 150 rupees, telling you around 25,600 to 25,650 is where immediate support lies. On the way up, however, we need to cross past this 25,850 to 26,000 mark very, very formidably.
So keep an eye out on all of these levels. Mangalam, thank you for that update there on